Hello? Hello? Haha, we have me. We have me. I've got you too. Thanks very much for joining me here on Tradespotting, where we're going to do a live stream doing a technical analysis on Gamestop and AMC. So if you've got any questions about those two specific things, make sure to get them in and I'll try and cover them. I'll also see how everybody's doing. And then, of course, today is Tuesday, which means that we have tadpole games starting at 6 p.m. EST, which is 11 p.m. my time, because I've still got some question prep to do. But it shall likely be at a slightly earlier time. You just need to tell me when it would most suit you for tadpole games to start on Tuesday. So that's something I'll figure out now by going and launching a poll, and you can tell me the answer. What time best suits you for tadpole games? Where do I do it? There, I do it there. And the first answer will be, it's all in EST, you know. Right, so you tell me. In fact, if GME closes above 187 this week, I will shave my pubes with napalm. The Ghost of Dan. That's a good idea, Dan. That's a good idea. Yes. I mean, a Dapper Dan man, you know, I would have thought perhaps you were a Dapper Dan man, but you're clearly a napalm Dan man. And that's, you know, all these newfangled shaving techniques that men are getting into, huh? Instagram adverts are all the rage with them. You've been on Instagram too much, Dan. Is that what it is? The old Instagram. You know, I've put in some times there and now I regret doing it because there are plenty of other times that you could put in. Is it an hour before close already? Ha ha. Yep. Trace one. I keep making videos so you can... Oh, sugar, it's gone because I keep making videos so you can hear the truth. Marantz Rants! Thanks. We appreciate your efforts, Marantz. And I know you do mine. Seeing you here and saying hello often. It's appreciated. Thanks, my friend. Pardon me. Right, so, yes, just quick housekeeping. I want to say there's the tadpole games later, and also thanks everybody who supports me in doing this. You know, I enjoy doing it, and I know some of you are really good people, and all of you are really, really appreciated. Thanks so much. So let's look at the information that we've... Yes, exciting information. How does the computer work again? Right, I click a button like that or something. And here we are. Looking at this chart, that's 1 inch. Jamie, this is the chart. Sorry, I started on the wrong one. Without audio or anything. And we're on the 4-hour time frame. It's as good as any, but we have the day to talk about because it closed. As you can see, here's the Tradespotting, what we call them. I don't know, right? I mean, it could be like a little miner's hat. You know, I would get one of them. You know how they got the little, what's it called? The little miner's light on the front of them. And a whale oil lamp on the front of my miner's hat. That's what that is down there on the RSI. As you can see from this time frame here, things look like they're progressing as we would expect. If you drop down to, say, the 4-hour, you can see here that on the two previous occasions that we had breakouts from this wedge, these lines are all clones of each other, right? So they're all exactly the same. You see that we had the breakout from the wedge, and from that diagonal, there was a test. Even if they look at it horizontally, you can see similarly here, or go back further. At this point, you also had one, and down on the 4-hour, you haven't really had a test yet, though you have had the same initial extension up towards the bullish control zone. See that? Here, which then subsequently went in for a test. Then you had it here, and subsequently you had that test. And so far here, you've had it up to here, but you've not had that test. So just something to look out for, and maybe it takes us to the downside. Looking at this daily time frame, what else do we want to point? This not the daily time frame. Jamie. Busy apes, right? They need to hear it straight, not stupidly. You can see that it looks to be that there potentially is like a resistance line above us. Whether this is a ascending triangle or not is debatable, but there's a resistance line above us we've hit a number of times. And does that prove to be, that support line changes on different time frames, doesn't it? If I'm on 4 hour, where is that support box? It's over here. That's not where it's supposed to be. That's not where it was. Support was at the 200 on the daily time frame. This is supposed to be down here on this line. Right, so I'm on the daily time frame. That's what that's supposed to be. Whoops, that's not supposed to have moved. Where's the target? Still up here. Okay, we'll move them over so they're in the same place-ish, horizontally anyway. Vertically, right. So, starting again. Welcome to the TA on GME. This is the Gamestop chart on the daily time frame. You can see on the RSI we've got these bullish accumulating wedges with a breakout and a retest after price action makes some sort of move to the top side. On this time frame, you can see the extent of that move takes you just to the center line or above where we're at the minute, and perhaps there will be a drop down there. That speaks to the downside and a test perhaps of this 200 period moving average, our previous horizontal support at this D point, and at that point you would look to measure the indicators and see how the strength of that trend and whether it was just a simple reaction to touching this resistance and then touching the corresponding support below, or if it was some sort of reversal from what we expect to be overall a reversal of this downward trend with lower highs and signified by this downward sloping red line that goes across the top of price action here in the daily time frame. So today's range was 184.40 up to 192.198. So we had a big extension up there. But if we do briefly just jump back over here, because I can't be bothered opening the website and show you, no, it's not there. Naff. Where is it? It's not there. That's my head in a wheel. It's the GameStop Max Pain data, which I had up. Anyway, I can tell you it's at 180. And, well, you could expect open interest to shift from Wednesday and Thursday onwards. I wouldn't put too much weight on the top side or anything too high just yet. Neither finishing above or below makes too much of a difference at the minute. And, you know what I feel about Max Pain, it's like a little bit of a gravity well, but it all comes down to support and resistance. And that area of 180 on our chart says here, right? This is where it is here. It is neither above or below important support and resistance. So that Max Pain zone is, with regards to the future technical analysis that you might use it for, is useless, right? It's useless. There's no point in it. But it does give you some indication as to where the current money on the table in open trades expects price action to be. That's why the trades are set up and the balance is where it is. Most people are most commonly wrong, which is why most people underestimate the importance of Max Pain, which is where most people lose most money. So up at 195 is the top side and down at 169 is the bottom. You might think to yourself there is a better range than that to look for with regards to where price action ends this Friday, and I'd say 184.40. That's not low enough to encompass not only that Max Pain, but the most recent support. And if we do go back to a weekly time frame and see what that would mean, well, you've got a good candle here. Finishing up anywhere above 180 would mean that this week was a very positive week on the back of a previous one. That's 2 good weeks in a row. Haven't seen that since the start of September. So can we expect that to happen? Well, I mean, that's the resistance here above us. It's still relevant on a weekly time frame. Look left, there's some wicks, 2, 3 maybe. And so this is very difficult to get beyond. You want to break it on a 4 hour and then go up or down. But there's a little bit of a fight going on at the minute. And it's because when you break through these areas, the range is quite high, like to 196 for the next test. And at that point, you'd have defeated a smaller term trend. The bottom test here at 169, that's like a really long-term trend coming in at these areas. As you can see on the weekly time frame, this horizontal has been important a number of times between these areas. So should you get there, having put in a bullish reaction the next time, you'd expect some sort of a bounce. And like even getting there is quite far away from the Max Pain zone. So Still lots of things to happen this week, I expect. Volatility, which had been tightening after a potential reversal, might increase again, though we can look at that. And back down in the daily time frame, just to finish off talking about the fact that we reclaimed this 50 period moving average. Those moving averages that I have on the minute, just the 50 simple and the 200 simple, the positives play, positive slope, and price action on the positive side of things, which is again positive, right? Lots and lots of times I've said the word positive to counter the fact that you're at this resistance and you're not managing to break above it or hold anything above it, and certainly not go wild above it. This 50 seems like it's holding. Thank you very much. What was that? Rotten, thinking, festering corpse of an odorous colon. Your name nearly didn't fit on the screen, as in it didn't. Thanks very much. That's appreciated. What did the message say? Bing bong. Been busy lately, but still watching in. Replays. Thanks, as always, you freaking legend. Thanks so much. That's a really nice message. Cheers, buddy. It's appreciated. I hope you're doing well. And although you're busy, I hope you're not working too hard. So this is what we're looking at, and great to catch you. So this is what we're looking at, that resistance above us, and these areas below, those that are beyond the max pain, I wouldn't pay much attention to at this stage, though we'll see like liquidity picking up, volume picking up, Gamestop report coming out and being essentially like an educative document for people who don't know anything at all, along with the odd little tip on how to, am I going to always have a Tradespotting thing across my face if I'm in the bottom right corner? Probably am. There I am, less than that on my face. Okay, so that GameStop report, if anything, it was, I would say, positive. And if you want more information on it, Rocky did a breakdown of it sentence by sentence. So check out his channel, it's really useful. And he makes it so that the educative content in it is actually of a good quality, because in of its own self it wouldn't be. So 186.70, that's where price action is post-market. And the daily time frame, we've had a little bit of a look at things. On the 4 hour, you can see this nature of this resistance slightly more clearly. Once, twice hit it, both wicks. The next time it was body closes, and then a body close above it, then another one just below it, and then that next one again just below it. So this line is crucial, and it comes in at around 188. And so if you do get beat on that bet, Dan, you'll only probably get beat by a couple of centimos. So it'll be attractive to some people. But sure, you break this level definitively, then you're up at 196. And the real test comes, as I'll show you, when we broke down the levels on the smaller term time frame. So this test of the 200 period moving on the 4 hour is similar to how you've held the 50 period on the daily time frame, right? See the way that works, and the 50 and the 200. And I imagine if you're good at any type of arithmetic, that obvious nature of that will be jumping out at you. You're looking for a positive cross on these two moving averages on the 4 hour time frame, which you'll get if price action can maintain current levels. But it also speaks to the fact that if price action did test down here, that would close that gap to the max pain zone. Most people would lose most money, as they most commonly do, this Friday. You'd get a test of this 50 period moving average on the 4 hour time frame, which is significant once you've broken through it once to test it here, and then confirm a reversal in a previous downtrend. That's totally and utterly normal. So that's where max pain is. That's where that moving average is. This is a very important one, but as you can see, there is a negative splay. Like the 200 is above the 50, and this is a shorter period moving average. It should be above here in bullish conditions, and so this is what you're looking to, folks. Below there, you'd have to break that, and you'd have to do it on 4 hour time frames definitively, and it's way more likely to catch price action than this horizontal, which hit at 1, 2, 3 and lasted the span of, what is that, already over a week. By that stage, it would be 2. You know, you think you're going to break that on the first pass. That's just silly, right? It's silly, right? So people that are betting on shorts, that's stupid. And even if they did expect price action to drop by the end of the week, then likely it would be a really bad trade to put more money on any sort of derivative instrument that was coming in at expirations, strike prices at anywhere below 180. That would be pretty daft, right? So speaking to that area, you know, it itself at 180 isn't a significant horizontal, and won't make a difference to the charts overall. Although there is a couple of tests of that area, we've been below it It is breaking this upward sloping horizontal line, but I don't put much faith in that side of things with regards to support. And so, yeah, I mean, it's possible, but it would be a bit stupid to trade for it. 1 hour, you're above the 50, it's above the 200, it comes in where your 4 hour 50 comes in. And now your maths is really jumping out. You know how obvious all of this is. The ADX is above the DI plus and the DI negative, and none of them are in a particularly strong place representing strong strength. Pardon me. And your MACD on the 4 hour time frame says you've had a period of flux represented by this weakness in the trend, and that's similarly clear on the RSI where you can see that you came up, you had this initial test into this area, you had these sort of slowly fading pushes to the top side as price action tapped again and again on this area of resistance, dropped down, caught the center line, but are not above your own moving average subsequently. And so that maybe then leads to another test and a failure based on the slope of it. At the minute, you'd expect that, and it'll come into the bearish control zone on the smaller time frames. And the test of this area now seems very, 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 very likely, doesn't it? Oh, technical analysis is kind of helpful. 30-minute time frame. You've got a sell signal on your MACD that suggests that you should take profit around 182, and it's not a long enough move to actually take a trade on. If you go on GME, you're an idiot trading short on it, but that's what it's saying, and therefore there's another reason why price action's going there. And at this point, it's bloody freaking obvious. Now you're below the 100-year own moving average and below the center line in 30-minute time frame on the RSI. You can see you've got this negative momentum on the MACD and flux on the rock outcrop DMI, which suggests that you're not going to break this previous trend, this area of horizontal anytime soon. You need to see some strength with it to do that, and there isn't any here. So that's the answer to that one. That's what Jamie's doing. That's the unless something changes, that's what it's doing. It's testing this upward sloping line within this, and look, at this point we could probably say, I drew this on speculatively, nobody else in the world was looking at that sort of thing, so we could probably draw it on and say that's what it would look like there. It'll involve a failure of that and instead come in to be something more like this, right? And when price action gets there and bounces and tests that horizontal again and looks to test these moving averages where they are, and they themselves put in a bit of a flux, and everybody says, my goodness, Jamie can tell the future. Just remember, I'm doing it to help people, not for any other reason. Right, so that's the GME AMC TA now. You can see you've dropped below. That was a good test of that top level there. I mean, we're on a 15-minute time frame here, and you can see that this is significantly steep move downwards of 10% from 44, spot 44, which was the target we identified, the 1272 extension, that downward sloping resistance that came in above you. It was at this move here, or if you potentially broke up, you had to go beyond fake out areas, including percentage moves beyond this downward sloping resistance. Didn't make it come back. Failed to hold the 200 period moving average. It's a really low time frame. And bear that in mind for what I was talking about with GME, but you did come across and test this quite clear horizontal line when you look left and you see where price action broke up from. That's the area where price is playing around at. Money has exited AMC at that point. That is a steep downtrend. That was a divergent second high. This is where money started coming off. It's a lower low on RSI. It's like a shatteringly quick break of that 200. The strength and the momentum to the downside and the negative trend emphatically won there. Like, money came off the table in AMC at that price, 44, spot 44, it happened. And you can tell in that time frame, and you can tell from that one indicator and that reaction in price, you just can. And then that's not to say it isn't going back in, but somebody's doing that. And then down here you've got your momentum saying exactly the same thing. Right, I'm going to quickly move off of that because whatever. One on to the 1 hour, and we're working our way up through the time frames. Does look like something to worry about. Well, there you go, shattering through the center line of your RSI very, very quickly on a significant time frame, breaking the 50-period moving average and a significant horizontal support and resistance. It'll have been a take profit area for people who had gotten short, should they have been doing that area, which again, stupid move, right? Dangerous, stupid trade. But the people who were waiting to add or had taken profit here and then reduced the buying pressure, which led to that fall of this under its own weight, perhaps. Though, my opinion, it was on the last time frame. It's quite strong opinion. Then you've got this 50-period moving average holding price action at the minute at 41.44. You would expect a test of that area. It's a strong horizontal resistance before. It was very important here when we were defining. We were down here at the C point and we were talking about, like, if you get here, it'd be great. It's the 618 of that retrace from our previous high at the B to the C. And we were saying, well, it'll be so good, so having broken through it after spent a long time there, you would expect a test of it. Having gone so high beforehand, then you would naturally see people take profit of that area because it's retraced 10%. A lot of people aren't interested in holding it and buying it there, especially when, the overall environment and understanding of AMC's place in the future of any MOAS is different slightly, inflection based on what I would see as the content of that report. Anyhow, it's not like this is a new message from Tradespotting, right? Anyway, so you're looking at this, right? You're thinking 200-period moving average, that'd be a freaking bargain buy. It's clearly in an uptrend on the downside of these moves, right? On the top side, you're looking left, saying it's broken this area of horizontal resistance. It's only testing it now. So if it gets there, back up again, the same people who look at 10% there and that, big greedy people or people who need the money or whatever, people who are trading that like that, they're going to just buy it there and they might even take profit again there. They probably would. And then you've got an area to consider that from the downside and the top side. This area is still important. It has been here, it was here, it is again now. If you never drop below, and like I say, people have been entering now that weren't entering up here, and that'll continue if price action drops. But I'm going to start higher up and work down again, because otherwise I'm going to get too much into what a day trader would think about that thing and put across the wrong message, right? So from a day chart, you've got above your center line testing the moving average, and you're doing that at the center line again. That's positive. You have had a positive cross on the MACD. That was a good area to buy at. I mean, it was a while ago, but it suggested this move has still got something to go. Even if the momentum drops a little bit, you're above the previous horizontal resistance. So that's what you needed to do from that move. You got it. This was positive. That was a positive cross on the Rocket Club DMI, and you have even got a tiny flick of a positive slope on the DMI. So I like on the ADX, so I like that. And I can see here that I've done the TA on this, and this sort of TA works out. This is reliable here. So I just think this is going up. Yeah, I think it's going up. I think it's going to the 618. Haven't seen this, and I know what this is like as well. So just looking at this, and maybe, I don't know, a number of years ago, long before I started YouTube, and before I built all the things into my technical analysis, just what I'm looking at here, and the way that this, I know how it crosses down here with the test and the cross again at the center line, and if it did that again here, I mean, I've seen this so often on different charts at the time and that, but it's like, it's all of this happening above the 236 now means it's so very obviously going to test the 618, and it's going to go up there, right? The bottom side of that's at around $50, and that's also a psychological level, so people will have orders in there, and it'll be a liquidity zone from there to $53 and spot's 30 cents. So that's where I'd be aiming for it at, and I wouldn't have really given a shit about these little moves up and down here, even had I been a day trader and this hadn't been a hodl asset. Then I still wouldn't have given a shit about that, because there's so many other things going on at the minute. Like, there truly is, where you can be making money. And the test and the retest and whatnot, it's just like a sensible trade, right? You just hold that, and it's going up there. Easy peasy. And like this harmonic in the background suggests, the true extension of this move, and where it could easily go, and where I would expect it to go over a period of time, though it'll depend on GME. I suspect it will now. I suspect that's becoming increasingly obvious, is up at $81, $82. And that's what it looks like on this daily time frame. Everything looks very positive. There's a chance that people will be reaccumulating at this zone that previously took profit. I don't think it was an area to go short. It was a short drop, only for big liquidity players who caused it to happen. It was a little bit predictable if you're as good at TA as we are around here, but that's why they were able to do it. Because they too have good people who tell them what to do with their money. Here's that, broke through the bullish control zone on the 4-hour time frame, dropped down, test the center line, and a little bit of Rick and Morty lips test coming on to put through this as it's gone through your 200 You're 50 though, still below it. If you put in a higher low in this trend, that means finishing somewhere around where you are right now, not even to go much lower. And that did suggest that you'd made the extent of the move had already happened based on what the indicators were telling us, especially in the higher time frames, where it doesn't look like anything other than continuation and accumulation, which, is kind of also what I'm saying as we get down here. It's the people driving this price action, even when they take their foot off the gas and then put it back on again, are the same people, and they are the bulls here, right? That's how it works. This, you might want to rely on the bulls. Let's go the bulls and that. They don't just sit there and buy it and then sit on it and do nothing. If there is that mentality out there, if it is a group of people, if there is one person, if they've got that aggressive bullish mentality where they know that they're in a significant degree impacting price with their trades, they take profit, they re-enter, they take profit, they re-enter. Sometimes they manage their position by just constantly adding at higher lows and forcing the price up. Other times they've put massive fuck off no's at certain places, and price will never get back there again because they've got a system and an algorithm for bidding. Anything that gets within $10 is their order, and they'll take that and they'll put another buffer on it and it'll be higher and blah blah blah. But that's not what I'm talking about. I'm talking about how the fact that there's reaccumulation. It's at the 200 period moving average at the minute. It could drop down to the test of 50 period on this 4-hour time frame, which comes in at $39. That'd be a really good re-entry should you get it. It's obviously going to then go up and test the 200. It'll bounce between them and then likely go up, similar to GME on different time frames. That's broken that 50. That's the early time frame. That's significant. It's then had an opening close below it. So do you think, hey, that's it's going to the 200? Well, not necessarily. There's horizontal levels here between. It's tested one of those with a wick, which in that candle has ended up being a doji. Then it'll probably test back up at the 50 period moving average, and you'll see it at 41.10, 41.44 again. Should it then try lower or higher, depends on the strength of the move and the place it gets to. But in the extended hours here, you can see that without much trading happening, nobody's pushing that test through, though there is nobody to trick, nobody to fool, and no retail money to take off the table after hours. So why would the hedge funds want to fuck each other, eh? They'll pally with each other. Fuck. 30 minutes. There's that 200 period moving average. You haven't tested it yet. You've come close enough. It's close enough, near enough. Not for a fucking test. No, not in this sense. You broke with 50 emphatically, so does it make it there? Let's see if it holds here for a while or does another wick down, 39.60. People will just buy it up here again. Should it get there? They just will. It's not ready to fall off yet. It just isn't. Definitely not. It's in the middle of an up. It's definitely not, right? There's 30 minutes. See, even when the negative trend has so much of an effect that it takes it down below a horizontal that I would consider to be important. It's on a higher time frame than that horizontal yet, so you could still go above it and not have really truly broken it. But this 200 is calling for it, and it was a definitive break. This hasn't even done anything. So the ADX still only just making it above 20. DI minus, curling down. It's about to give up. And then you've got the RSI in the bearish control zone. That's what brought price action here. There was that lack of strength. And so let's see. Looks like it might turn around, actually. Having started on the lower time frames, was a bit surprised how crap it looked. But that was mostly the fact that it was me identifying that people were taking money off the table and re-entering that, and you could see it immediately, and it pisses me off because it's not that kind of asset. But I see what they're doing. If they're the ones driving price, then I suppose it's good for everybody. But it's not the sort of culture that the apes are known for, and it isn't what's going on GME at the minute. So that's the AMC and GME. Thank you very much for tuning in. What's everybody got to say about that? You'll hate me now again, probably hate me. What can you do? Deliver what the truth is, what they're saying. Yeah, me. The truth is going up. The truth are both going up. It's just, that's the way it is. I wouldn't be surprised if hedge funds oiled each other up and fucked each other while on the nose. Can they? Allegedly, I didn't say that. I read something out from chat. But yeah, it's all human beings that work at these hedge funds. So what we really want to say, remember, was it you, Brad? What we have to remember, although we hate the hedge funds and they've got this, it's all human beings that work there. And so what we should remember is to hate those human beings. Okay, not just the brand name, but those people who do that job. And, all 20 of them who do whatever it goes into pushing that button or firing that cannon that lands on that poor family, they all fired that bullet, even if not all of them pulled the trigger. You know, the guy loading it, the guy aiming it, the guy that puts the music on so they're a little bit distracted. How was Thursday? Corey Burke Trey's one. How was Thursday? How was Thursday? Oh, right, yeah, on the upcoming week. How was this Thursday? Some people were like, oh my goodness, because we saw these big drops down to the 170s. And then by Friday, they were looking back on Thursday and they were like, oh, right, well, thank goodness we're back up there, maybe even testing above max pain. Everything's all right again. Phew, that was it. That was Thursday. Congratulations. You and I had a good chat. We got on really well, as we always do. And probably will for a long time, my friend. Hi. How you doing, Kim? Hi, Kim. Hi. Right, so I'm going to go and come back for Tadpole Games because I got to get some more questions ready. I found some money under the couch. Percentage chances of GME hitting 160 ever again. Well, I mean, it all depends what happens if we go up down and we test 178, 179, and then like hold 180 and going up again, and then we find ourselves above 225. I wouldn't expect a test of 160 within the next month or two, and then come December, should prices are going to go one way or the other in the second week of December, should they go up, then you'll never see it again. But before then, there's a chance, a couple of chances. Shane. Isn't it crazy? What am I doing? I shouldn't be giving out this kind of technical analysis for a start. It's like, doesn't. I mean, it should get me famous, but it doesn't. So why do it? Because then I can still get all of the shit from people if it doesn't go right. So just stop it. You're all very welcome. Cheers, Chris. Thank you, Chris. Cheers, one. Thanks. You're welcome. Could I ask if you see Ichimoku Cloud? Rocky used it and it seems good. Yeah, I do like Ichimoku. I don't really put it on here much. I forgot even my favorite indicators here. I have it on for different things. Yeah, it's good for assessing trending moves and reversals and like tests of things and that. And if I'm doing something where I'm trading it myself, like I'm reading this out, you know, as I go along. So if it was, say, for example, something like 1 inch, right? And I had this on, and I'd do the analysis with the moving averages, and I'd slap more on, and I'd do different ones on different time frames. And because I've not been reading it out, I'd turn it on, I'd turn it off, and I'd have like 3 or 4 things on and off in 5 seconds, and I've got an impression of something. And then do the same on loads of other different indicators, including, you know, Bollinger Band, Ichimoku Cloud, on-chain channels. I'd have marked out support and resistance on the chart to start off with and delete everything apart from that and go through it again, draw off different patterns and look across the same thing on the RSI and then see where important levels had been on it previously and see what will look likely to come in terms of tests and retraces and strength and that, and then put it all together. And Ichimoku Cloud would form 2 parts of that. You know, I'd look at it near the start and then again near the end and say, well, this is what it says, you know, where's the leading line? Where's the lagging line? How did those things feed into what I've just done and all the other TA and that? And a lot of my TA is like really manual and that, looking at stuff and thinking about that thing specifically, and then like probably even like for definitely back when I first started doing it, writing down like that thing in my trading journal saying this RSA was here. You know, which is like, I say it stupidly, but it's so important. And that, and the people I was been learning with would have been saying like, well, why didn't you write it down then if I was later on saying it? So, you know, and anyway, so like everything, do all of that. And Ichimoku Cloud's good. Rocky likes, because he's good at explaining how you can use it in combination with like teaching people the importance of certain things about TA. So he likes to do that in a way that like he knows is helping people themselves, Whereas so do I. I mean, it's not that I don't like it. It's just that I'm so used to telling people like how my measurement of things too. Like also, I don't really like the Ichimoku Cloud. Hello, thanks, Dan. What was that? It was Dan. When I have trouble sleeping, I visualize a hedge fund manager jumping off a tall building in New York City and shouting, the soothing sound of its head going FUD. Allows me to sleep. I just read that out from chat. I don't know what that means. This is me reading things out. I'm not responsible for that. I think it's funny, actually, though. I can't condemn or condone that. I think it's funny. And would it be a thud? I thought it would be more of a splosh, but you might be right. And then we'll end that poll. Can I end that stupid poll? People said the later the better, it seems, from that. Okay, thanks. So, cheers. Thanks for that information. And the other times also exist, so who knows, but that's a good one. So what was the question I was answering? I forgot about it. What was it? If you're still giving out free technical analysis, I will curse you and your offspring under the 10th generation. Until the 10th generation, that's far too much, Zara. That's far too much. Fine to 10th generation. Wow. She's real wicked, eh? What about that? Everybody... No, it was 5 p.m. Yeah, it was 5 p.m. I thought that was weird. Right, okay, so that was a bit dangerous. Does anyone to help me protect me from that? Got anyone else? I've got all this. I can't sleep myself because of the ruinic magicka that's been cast upon me. Thy red chest queen, like, still affected me. Every night she's doing that, casting those spells on me with her crystals and stuff. And there's nobody coming in my defense. Cast some. To create a web of Mortys or I don't know. Anyway, I have to get prepared for tadpolegames, so I'm going to love yous and leave yous. Thanks very much for Dan and Odorous Thinking Colon. It was really appreciated. Donations and everybody else who supports the channel, members and Patreon members. Thanks so much. Obviously, it's because of you I'm able to do this and do it consistently. So thanks, because I do enjoy it and I enjoy spending time with all you. Tradespotting. Hello, tuning in. I should hope so. I have a question about AMC. Okay, go for it. Can you please explain why it dipped based on the harmonic pattern? I assumed it was bullish, no? Well, I mean, the harmonic pattern itself is bearish, but that doesn't mean prices are going to drop. I mean, you can't trade the harmonic. This is all right. You have not tuned in for the harmonic trading class on Rocky Outcrops Discord, which suggests that you don't know the value of money because it's very cheap to join that Discord, and I maybe even did do in that, and in which case you would, if you watched the harmonic courses, it's worth like so much to you and you're interested, and it's a good question, right? Well, this is a speculative harmonic. You have touched the C point and you're on the way to the D point. A harmonic trader looks for harmonic equilibrium and a ratio that defines the structure dependent on the harmonic framework within the moves, those moves being defined by M's or W's commonly. And you can see within them there's an A, B, C, right? And here's your A, B, C, X to A, B, C, A, B, C, right? That's what that move's called. And you had that, which says, well, some people who aren't technically harmonic traders will trade from the C to the D. That is a very unreliable trade unless you're getting it at the C, which is why I was saying non-financial advice way, this would be a good buy. And then after that, everything gets a little bit harder. The reason it dropped was because it hit a resistance level. And after testing resistance, price tests support. If it doesn't, then that's very bullish and it's going to break it imminently. You might get 3, you might get 4 touches, but any more than that without a test on the other side likely means it breaks. And should you get 1 test on the other side and go straight back up again, same thing applies. And if you want to know more about that, then I put a support and resistance video on my channel for members. You can see that if you're a member. Or I also did it for free as a segment on Rocky Outcrops channel on his live show, and it's still there, and I'm sure the people will be able to direct you to it and that. And that's why you should be tuning into Rocky Outcrop anyway. Like, it's not about what's gone, it's about what's going to come, and shitloads of more of the same and better. So make sure you tune in future, and you won't have missed anything that you won't learn again, and the things that are still to come are better still. So definitely make sure you're tuning into Rocky Outcrop. So you've had this test of having broken support, tested resistance up here. You now test support. Support is the area you just previously broke, right? It was previously to it becoming support. Resistance, this is the first test of it to confirm it as support. Resistance flip support's very bullish, because then you've not only tested it most recently here with this confirmation, but you can still also include these positive contributions of price action beforehand and say, well, we did all of this. And not only did all of this really happen, but it changed everybody's mind who was stupid enough to think of it going short, or at this point was hoping for a lower test to enter and it went up. They all entered at this point when they didn't get their lower test, or when it was obvious it wasn't going down, in which point everyone went long here. And so another test of that area, those people probably, a lot of them up here, caused the price to drop, right? This was a profit-taking drop, right? That's a resistance. It wasn't an area to short this from. The area to short it from, if you are a short trader and you're looking at this trying to do it from, is where do you best manage your risk and your reward? Well, it's up here at your all-time high. And there's the D point, or the harmonic entry on this. And the D is the entry, right? That's where the harmonic traders would look for harmonic equilibrium. It's where the harmonic support and resistance is likely to be found. And it would be a perfectly natural and common expression of price action, having put in the formation it has done so far. And that's not because of the shape it made, it's because of the harmonic ratio, because of the nature of moves between each of these Fibonacci extensions, which is to say it's how far the price action has gone once it's tested a support and gone then and created a new resistance, and what that means it'll do on the next time. And you can combine it to make your harmonic trading even better with good TA on other things. And a lot of people come into trading and go for one thing, rather than like go through everything over the years, and rather like pick up the things they like and use and appreciate and get rid of the stuff they don't. And so they'll go straight into harmonics and not understand anything else. And then that's great, right? Because I mean, if you're going to only go into one thing, that's probably the best thing. Like, you'll have to understand support and resistance, but if you want one overall framework that gives you every entry aspect of it, like stop, targets, and entries, then it's probably one of the better ones. But you'd have to understand support and resistance, and or you'll get it all wrong, and then you won't be very good at it, even if you don't get it wrong, unless you understand all the other things about momentum, volatility, trend, and perhaps a little bit about volume. Though again, it's even less relevant in harmonics. Anyway, on top of that, you'll have to understand terminal candles, like candlestick technical analysis based on candlesticks, which is like, again, some people find it boring. I think it's quite funny. It's dead easy. The names are easy to remember. There's only like 30 or 50 things like to learn. You can see them and look at them every so often and learn them over a week or so. It's dead easy, really, right? Anyway, so there's all those sort of things to look at. So the reason it dropped, right, was, I'll tell you the short answer, is because, big bad algorithm, right? It's the big bad algorithm. There's nothing you can do to change the world around you. Nope, silly me, eh? Why am I calling price action like this? Why am I making it so easy and obvious? Why? Silly, right? Because the algorithm rules the world. Nothing you can do. It's all about the algorithm. Oh, I've got grapes. I'm going to eat my grapes. Thanks for everybody for tuning in. It was appreciated.